You want to get closer, or are you good there?
I'm
My
good,
head's
man.
my head's a lot bigger than yours right now.
Oh yeah, always has been, always will be.
All right, welcome back to another pod. Today, we're going to talk about one thing and one thing only, and that is gold.
Gold has been on an absolute tear. Obviously, it's broken out of that range, right? It came up 2019, 2020, late 2023, October, November. It sort of came up above that 2000 and then stalled. Finally, it has broken through. It's flirting with 2400. It may be a little bit overbought, but ultimately, gold is going higher, and the demand case for it is getting stronger by the day.
The thing about the last, 10, closer to 15 years is every time gold would have a little bit of a rally, it would fizzle out, or, it just didn't seem to have that staying power like it does today. Today just feels different. Gold's gone up, 35% in the last 6 months from its October low, but I don't know if it is overbought. I don't think it is. I still think it has a lot of juice left in it, even just on this upswing. We could be days, if not hours, away from $2,400 an ounce. The bigger question is why does this rally feel different? Why does it have more oomph in it? And I think a lot of that has to do with the fact that the world now knows the US has one strategy: monetize the debt. They've added $1.1 trillion to their debt in the last 6 months. From 2017 to 2025, it's estimated the national debt will double from 20 trillion to about 40 trillion.
And we're most of the way there. I mean, we're almost at 35 trillion. There's two or three huge stories behind gold right now that's just driving it, that's making people believe that this is the beginning of a much bigger, more sustained move. Number one, central banks. The money creators themselves were coming off the second record year in a row of buying. So in 2022, they broke the record. They bought something like 1,087 tons of gold. That's significant because the world only produces about 3,000 tons per year. The following year, 2023, again, just missed the all-time record of 2022, but still above 1,000 tons of gold. These are the creators. These are the people who print the money.
Call it 1,050 tons of gold bought in 2023. China alone did over 200 tons. China has been a net buyer of gold for 17 consecutive months.
Yeah.
2 months ago, they bought 12 tons of gold. Ireland's entire gold reserves are 12 tons. China's on a mission. They've gone from 2.5% of their foreign currency, let's call it reserves, in 2019 being gold, to now about 4.5%. What does that mean? Well, we all know the BRICS have the ambition to create an alternative to the US dollar. Who runs the show for the BRICS? It's kind of a battle for supremacy, but we can say China does. Obviously India wants to rival them as well, but it's a known fact that China wants an alternative to the dollar. And when the US banned Russia from using SWIFT, it's backfired. And so they've created their own systems. They've been testing out their own systems that don't use SWIFT, that don't trade in the dollar. And this all provides a backstop for China's motivation, for China's ability to go out and say, you know what? We have the ability to attract other countries to trade in currencies that we like. And by the way, in order for us to become attractive, because let's face it, very few countries really respect or trust the yuan. So for China to gain the trust of the international community, they're going to have to do something special with their currency. And it starts with adding more gold to their reserves.
Yeah, underpinning it with gold. What makes China's gold buying so profound is that it's been the world's largest producer of gold for many, many years. 370 tons of production last year. Okay, next closest, Australia and Russia both do about 300 tons. Canada's down around 200 tons. China has for a long time been the world leading producer of gold, and they're buying it like crazy. So number one, central banks are buying about a third of all gold produced annually. They are the demand case when it comes to gold. Everything else is secondary to the central banks. Number two, the second big reason I see driving gold is the underinvestment in gold mines, gold exploration over the past 10, 20 years. You look at 2014, gold production was 2,990 tons. 2023 was exactly 3,000 tons. It got as high as about 3,300 tons, and it's been sort of fading. Gold production has been flat globally for about 10 years. That stat alone is very profound when you consider how much fiat currency has been created in the past 10 years.
New discoveries are lower and lower grade, and gold mines that have actual scale, multi-million ounce mines and deposits are getting harder and harder to find. When you have these explorers and these mining companies going out and trying to find these assets, these projects and deposits, they have to blow more money to find these projects, which means the capex increases, the risk increases, and it makes it less attractive to go after these deposits unless the price of gold rises. The price has to go up to make exploration attractive. We saw the same thing happen in the oil and gas space. Nobody was exploring for oil and gas for about 5 years there. Yeah. Price starts to uptick. Next thing you know, explorers are back.
The inflation effect of the last 5 years has increased the cost per ounce to produce gold massively, right? I mean, some of the big boys used to have it down 600-700. Those days are over. Even the most profitable of gold companies, are producing between $1,000 and $1,500 an ounce.
That's right.
You've got central bank buying about a third of all gold production annually. You've got under exploration and flat gold production for the past decade. Now, the third factor that I believe is really driving, the debt monetization, but the US crossed over the 1 trillion annual interest payments. The annualized rate in Q4 of 2023 exceeded $1 trillion in interest payment on the national debt. There's 7.6 trillion in interest-bearing US debt maturing in 2024. 31% of all US government debt is coming due. If they are forced to renew at the current levels, the interest on the debt is going to approach and exceed $2 trillion. That is simply untenable. So that means interest rates have to be lowered at some point this year and significantly into next year. That's a huge bullish case for gold. And it also guarantees massive debt monetization in the coming years ahead.
Interest payments now exceed defense outlays. They're now paying more on interest than they are on their defense. And what backs the US dollar is the military might and the economic might of the country. If they don't lower interest rates, standard of living in the US will have to drop. Social programs will have to be cut. Defense budgets will have to be cut, or they're going to risk bankruptcy. It's funny because the Fed says, so they're saying that their monetary policy is restrictive right now. And that's just basically focusing on interest rates. But the monetary base has increased. And the same thing in Japan has happened. So are they really being restrictive, or are they, hey, interest rates are high over here and over here, oh, money supply is increasing?
Costco was selling $100 million worth of gold, right, in Q3 2023.
Yep.
Wells Fargo came out yesterday or today, and they're now estimating that they're running at about a $200 million per month in gold sales. Yeah. They bumped the limit from 2 bars up to 5 bars per customer. Executive members are getting 2% back on those purchases. Citigroup credit cards, they're receiving an additional 2% off. So Costco has an extremely reliable customer base, and they are tapping it. I mean, $200 million a month.
That's why I get excited about this gold run. That's why it feels different than previous gold runs. Main Street is involved in this rally relatively early on. I've never seen this before. If you look at it, I saw a funny meme on the internet the other day. And this is why I think Main Street is waking up to the inflationary game that's been going on now for virtually 20 years, 25 years. So there's a funny meme online. It shows 10 1 kilogram gold bars could have bought you a nice house in 1929. And on the other side of the image, 10 1 kilogram gold bars could buy you a nice house in 2024. Tell me what other currency can do that. And when you see things like this, it's anecdotal, but when you see things like this on the internet, on Instagram or Twitter or whatever, and these people aren't finance professionals posting this. They're waking up to the fact that gold is the world's most trusted currency. And another thing that I actually really like about this gold rally is the fact that Bitcoin has been on an epic rally. It's been extremely volatile over the last decade, but it's been on an epic rally. Now, it's so high now that for once, I would say gold will double faster than Bitcoin will at today's prices. And I think that makes a strong case for the gold rally because Bitcoin's been stealing its inflation thunder, gold 2.0, digital gold, whatever you want to call it. Now they're on a relatively even playing field.
I think the longer Bitcoin kind of just stagnates stabilizes, stagnates, whatever you want to call it, kind of around that 70K, 65 to 70K range, I think it helps gold because people see gold as value, and they also don't feel like, okay, I got to buy Bitcoin today because it keeps going up. It's kind of like stalled out a little bit, right?
There's no more FOMO with Bitcoin, and there's a little bit of FOMO forming with gold. You can feel it, you can see it in the mainstream.
Yeah.
The Costco example is one. And I think another thing to consider is, we've I wouldn't call us gold bugs, but we're big backers of gold, and we're believers in it long term. And for the last 10, 15 years, we've been writing about gold's imminent rally. Probably almost 20 years now. Okay. To be fair, we've been early, very early. But the problem is the argument that we were trying to make 10 years ago was like, look at all this money printing, look at the QE, look at the low interest rates, blah, blah. It's going to create inflation. The inflation never came.
Yeah.
And belief went down in the fact that day would ever come. But 2022 rolls around. We have almost, you could say, hyperinflation scenario. And it's been persistent. And now people see inflation is sticky, and gold continues to go up. Now it's no longer an ethereal concept. It's in everybody's face right now. Inflation's not going away. Gold is creeping up. Gold is the inflation trade, and it's become reality. It's not a concept anymore to people on Main Street.
The mimetic power of gold, the cultural power of it, the meme power of it is higher than it's ever been. Unlike Bitcoin, gold has actually broken out above its all-time high and is still going up. Whereas Bitcoin kind of hit its all-time high and it's stagnating there.
Before we wrap it up, I know predictions aren't worth the paper they're written on, but what comes first in your mind? $2,500 gold or $2,200 gold? Does it pull back, or does it go to $2,500 first?
I think it pulls back, but I don't think it breaks 2,200. I think we could see a pullback to 2,280, 2,260. And then I think it's going to rocket. I think it's going through 2,400 in the next day or two. We got pretty close in the last day or two. I think it's gonna hit 2,500 before it breaks 2,200, and that will move up the floor. As always, gold is great to own, but if you want leverage, you got to be in the mining stocks. They always outperform gold, typically three to 1. But I mean, you'll have in these secular bull markets for gold, you'll have miners that go up 10, 20, 30, 50 times that are making discoveries and moving assets in production. And that's what excites me.
And I think inflation is not going away. It's going to ebb and flow for the next probably 3 to 5 years. And the closest comparison for timeframes that we have was the 1970s. Interest rates were rising and gold was rising in tandem. So what comes first, 2,200 or 2,500? 2,500. I think that people are going to realize this inflation is here to stay. They're going to readjust their target levels, probably to somewhere around 3, whether they say that or not. And we're going to be stuck in a stagflationary environment for quite some time. Don't forget, the US dollar sits at about 103, US dollar index 103, 104 right now. Gold is rallying in the face of that. Yeah. So this is real. The gold rally is real. This isn't a head fake. 2,500 before 2,200.
Look back to the 70s, right? Gold went from $35 an ounce in 71 to a high of just over 800 in 1980. The bull market of the 2000s, it started around $270, $280 in 2003. It jammed to above 1900 in 2011. Our starting point was 2000. Every gold bull, right? You've seen 5 to 20x the price of gold. I think that's what's in store, right? I think ultimately gold is going to go between 10 and 20,000 an ounce. When you really think about that, when you take a step back and think about that, the valuations of some of these miners are going to go through the roof.
I think that about wraps it up. Thanks for tuning in.
Take care.